So it finally happened. For the first time in years, Tesla is not the world's top seller of electric cars. And look, this isn't just some headline. It's a huge power shift in the global auto industry, signaling that a brand new era of competition is officially kicking off.
All right, so here's how we're going to break this all down. We'll start with what happened, get some context, then dive straight into the key numbers. After that, we'll look at the wider impact and what's next for Tesla. And of course, we'll wrap it all up with a quick recap.
Okay, let's just get right into it. What exactly happened here? It all comes down to the numbers. And these figures, well, they're probably the clearest demand signals Tesla has seen in a very long time.
First up, for the full year, Tesla's global deliveries dropped by 9%. Now that might not sound huge on its own, but here's the kicker. This is the second straight year of decline. That's a huge reversal after basically a decade of non-stop growth.
And it actually looks like things are speeding up. If you zoom in on just the final quarter, deliveries dropped by a whopping 15% compared to the year before. That's a pretty strong signal that the headwinds are getting even stronger.
So why is this such a massive deal? I mean, companies have down years, right? Well, to really get it, you have to remember just how dominant Tesla has been in the EV world for a really, really long time. You know, for years, when you said EV or BEV, a battery electric vehicle, you were pretty much just saying Tesla. They practically invented this market, and their sales showed it. I mean, they peaked at 1.81 million cars delivered worldwide back in 2023. That was without a doubt the top of the mountain for them. Okay, so with that context in mind, let's really unpack the numbers. There are three key things here that tell the whole story.
All right, key point number one, the sales slump. The official numbers really paint a clear picture here. They confirm a major sales drop for Tesla, and maybe more importantly, they show that it's getting worse.
So let's put some specific numbers to it. For the full year, they delivered 1.63 million cars. That's down from 1.79 million just the year before. And again, if you look at just that final quarter, you see that steeper 15% drop, which just hammers home that negative trend.
Next up, key point two is huge. This didn't just happen in a vacuum. While Tesla's sales were falling, another company was absolutely surging. And they didn't just catch up, they blew right past them.
And here it is, the new reality right here. China's BYD sold 2.26 million battery electric cars. Compare that to Tesla's 1.63 million. I mean, that's over 600,000 more vehicles. There's no other way to put it. BYD is the new global leader in EV sales.
So that brings us to the big question, right? Why did this happen? And for our third key point, the sources point to what is basically a perfect storm of challenges hitting Tesla all at once.
Okay, let's tick through them. First, in the US, the big $7,500 federal tax credit went away, and that definitely cooled off demand. Then you've got this explosion of fierce competition, especially from Chinese automakers, not just in China, but in Europe too. All that competition led to a really long price war, which, just crushes your profit margins. And on top of all that, Tesla's main cars have been around for a while now, and they just don't have that new, cheaper model to fight back with, at least not yet.
So what's the impact of all this? This really isn't just a Tesla story. This is about a fundamental shift in the whole EV landscape. And why it matters is because the ripple effects are being felt, well, everywhere. And you can see that impact globally. In the US, for example, analysts are now forecasting Tesla's market share is going to fall to about 3.5%. Over in China, it's even more dramatic. They dropped out of the top 10 sellers for the first time in 3 years. And then in Europe, their sales took a nosedive in some really key countries. And this is happening even as the total EV market there is still growing. That's a bad sign. So, the big question is, what's the comeback plan? How is Tesla going to respond to all this pressure? Let's take a look at their roadmap for what's coming next. It looks like Tesla's future is really riding on this very aggressive product roadmap. After they get the refreshed Model Y out, the pipeline just gets packed. In 2026 alone, we're talking about a cheaper Model 3 and Y, the Cybercab, and a new Semi. Then, they're planning the new Roadster for 2027 and a Robovan for 2028. So, a lot is coming.
And this really gets to the heart of their strategy. It's not just about pumping out more cars. It's a much deeper push into new tech. You constantly hear them talking about their long-term vision. They're betting that their future isn't just about selling cars, but about leading the way in things like AI and robotics.
But let's be real for a second. For now, the sources make it super clear.
The company's financial engine is still cars, plain and simple. That whole future vision is what investors are betting on for the long haul. But right now, today, what pays the bills is selling vehicles.
All right, let's wrap this up. Here are the 3 main takeaways from all this.
Okay, so number 1, Tesla's decade-long dominance is over. Sales fell for a second straight year in 2025, and they lost the top spot. Number 2, China's BYD is the new global leader in battery electric vehicles, and they did it with massive scale and a whole bunch of different models. And finally, number 3, Tesla's response to all this competition is an ambitious multi-year plan to launch a ton of new products.
Which leaves us with one big question, right? Is this just a temporary slip-up for Tesla, or is this the new normal? Are we now in a hyper-competitive EV world where no one gets to be king of the hill for long?